The US Commodity Futures and Trading Commission have filed a complaint against the world's largest crypto platform, Binance, and its CEO. Changpeng Zhao has allegedly broken American derivatives rules, actively soliciting US-based users and subverting the exchange's compliance program. CFTC rules require platforms to register with the agency in order to let Americans trade those products. The filing has the potential to completely upend the exchange's operations. Bitcoin is now down 3% and Ethereum is sliding 3.5%. For more on this now, let's go to Susanna Streeter, who is Head of Money and Markets at Hargreaves Lansdown. Thank you very much for being with us today. Susanna, what's happening with Binance? Why is Binance attracting US customers if it's not registered with the CFTC in the first place? And also, I'm curious, are US customers particularly attractive?
Well, the CFTC is estimating that actually out of Binance customers, 17.8% are actually from the US.
Oh, wow.
And yes, they are attractive because, of course, during the pandemic, many built up huge piles of savings, and around 15% of individuals plowed that money into crypto during the pandemic. So you can see just how lucrative the US customer base would be for Binance. And it's alleged, the CFTC claim, that what Binance were doing was, on one hand, saying that they were tightening up the rules to make sure that users really had to identify themselves, yet at the same time directing users in the United States to use virtual private networks, effectively shielding where they were operating from. And this really is at the root of the allegations and this claim against Binance, and it really could upend their operations, as you say.
Right, Susanna, makes total sense, right? Those savings in American households really driving also demand-driven inflation in the US particularly. And also, we have seen a sort of flight to safety recently, and also safety including Bitcoin somehow being a safe haven, somehow having store of value functions. Do you think this will continue given the Fed's monetary path ahead?
Yes, we have seen this surge in Bitcoin prices again as the banking scare took hold. We have seen this in the past at times of extreme stress. There has been a bit of a flight into crypto, but as we've also seen, crypto is extremely volatile, and that's why as a currency store of value, because it's so volatile, really has been pretty much unfounded so far. Because if you've got a currency that's that volatile with big swings, as we've seen, that doesn't really instill significant confidence in a store of value. So I expect that this volatility will continue. Certainly, we've had the collapse of FTX exchange late last year. That really shook the crypto world. This is shaking the world again. There will be an expectation that certainly crypto will survive in some form, but we haven't seen the full impact of the regulatory clout, I don't think, on the sector. It's clear that regulators do want to become a lot more rigorous. And of course, we have the uncertainty with the arrival of central bank digital currencies, whether they're going to be linked to stable coins. There is a lot of uncertainty still surrounding this sector. And this is the latest headwind to be blowing through the crypto world.
Absolutely. Let's see if those prices will continue holding up. Susanna Streeter, thank you very much. And now let's go to other top stories from around the world. The United States and Japan have struck a new trade deal on electric vehicle battery minerals. The agreement prevents both countries from enacting any export restrictions on minerals used for EV batteries, including lithium, nickel, and cobalt. The deal will also grant Japanese automakers access to the new $7,500 US EV tax credits. The deal aims to reduce US-Japanese dependence on China for such materials. China has spent $240 billion bailing out 22 countries as part of its Belt and Road Initiative, according to a recent study. China has lent hundreds of billions of dollars to build infrastructure in developing countries, but lending has tailed off after projects failed to pay back expected dividends. Almost 80% of the loans were to middle-income countries, including Argentina, Mongolia, and Pakistan. And Disney has begun its first round of layoffs this week after it announced it would be eliminating 7,000 jobs last month. The cuts are part of a wider effort to save $5.5 billion in cost and make its money-losing streaming business profitable. It follows other media companies like Warner Bros. That are also cutting jobs and spending. A second round of layoffs are expected in April. And that is all from business for now.